Hey, happy Monday, everybody. It's Paulo Brands with This Week in Rates. Hope you had a marvelous weekend. But here we are. Let's talk a little bit about interest rates. Interest rates are good, and they have been for the past few weeks. And by the way, there's been some huge wins. Let me share a few wins with you before we get into the market update here. Number one, last week, a client got negotiated a $25,000 credit after they got into contract to cover all their closing costs and get their rate into the fives. That's huge. A second one, a little bragging thing from us. We beat a credit union by 0.5% on interest rate. We were able to, a client just asked us just to see what a rate we could give them because they thought nobody could beat the credit union. And they were shocked when it was 0.5%. To be truthful, I know we have great rates, but not 0.5% difference. But there you have it. There are some big wins. Let's talk a little bit about interest rates. We're going to dive more into interest rates in this next slide, but here are today's interest rates. VAs in the mid, 5.625. Same with FHA. Conventional is kind of going between that 5.9 to 6.125. But wait till the next slide. This is going to really share. This is very impactful. I don't know what that means. Jumbo actually creeped up to 6.5%. Keep in mind, these rates are shown with no points. Yeah, right now people are getting their points, a point paid by the seller, which is, at VA, FHA, you're talking low fives, conventional jumbo, and you're in the high fives. So a great time to negotiate a great rate for yourself. What is that slide? It doesn't make any sense. If you're watching this without volume, you're like, that doesn't make any sense. Let me explain. On the left column, that is your FICO score. So let's say you have a 730 FICO score. We're going to start from the bottom and work our way up. The average rate last week was 6.625. If you go to 740, it's at 6.375, 760, 6.375, 780, 6.25, 800, 6.125. What's the point? Why am I sharing this with you? Well, even if, especially if you're not ready to buy or refinance right now, or you're just waiting for rates to go down and you're not paying attention to your credit score is going to give you a 0.5% difference in interest rate. Now is the time to really work on that. I ran a calculation. I think it's in the comments or in the email. I don't know where it's at. If you had a loan of $400,000, let me make sure this number is right. The difference between a 6.125 and a 6.5, I think I used in this, is almost $50,000. So here's the thing. We work with a company called My Credit Guy. I love working with them because I have access to what they're doing, so I can always ensure that your dollars are being well spent. I would get connected with them now, get that score from 720 to 740 to 760. Your $100 or whatever they charge a month is going to be well worth it. You're going to save a ton of money. It's very interesting, huh? A lot of people don't know that. But now you do. Let's talk about the reports from last week. Case-Shiller, this actually measures appreciation in home values. We actually ticked down a little bit last month to negative 1%. We're still up year over year at 1.7%. Now, this is nationally. So you're going to have pockets where home values are declining a little bit. But as we're starting to see interest rates dip, I will tell you the level of volume that my team has dealt with over the past 2 to 3 weeks has been huge. More and more people, as expected, as rates are going down, are starting to get back out there looking for houses. And if this trajectory continues, we can start seeing some upward pressure. Now, remember, if you want a 5-year appreciation report for any area, let me know. I'd be happy to give that to you because that's part of the planning process. We want to make sure that if you're going to buy a home, it's going to be worth your investment. So let me know. I'd be happy to help. What is fueling the interest rates? Now, remember, we're all, the Feds and the market, they're very focused on inflation. They're focused on unemployment or the employment numbers. And last week, ADP came out and look at that, 32,000 jobs lost. We're starting to see unemployment rates start ticking up. And we talked about this in the beginning of the year when we talked about what the Feds were going to do. They're going to have to reconsider their position as it relates to short-term interest rates. More and more as we progress into the numbers, we're going to start seeing unemployment start to tick up. It's interesting because how these numbers are calculated can be very misleading. And it doesn't always make sense to the real data today. I would venture to say that the unemployment numbers are actually higher than what the reports are saying, are stating that they are. We know last week the Feds cut the, was it last week? No, it was 2 weeks ago. Was it 2 weeks ago? I don't remember. Oh my God, I'm having a moment, but that's okay. I can tell you this week the Fed's notes will be released. This is more important than what they actually did by decreasing the short-term rate by 0.25%. Because what investors and bondholders are going to look at is their verbiage. Are they thinking that inflation's under control, employment's going to continue? Are they dovish? Are they hawkish? These are things that are really going to move the needle this week with interest rates. You want to pay close attention to what is being said in the Fed meeting notes. Consumer price index came up. Core year over year is at 3.1%. Headline inched up to 2.9%. Didn't really change the market all that much. But again, we're at getting close to that 2% where the Fed is really focusing on. Next week, you can't really read it. So I'm going to make it bigger for you. I'm going to get out of here for a second. On Tuesday, you have the U.S. trade balance and ISM service report. This sector trend, this gauges the sector and trade strength. Stronger data can push bond yields up and mortgage rates up. Weaker data can ease them. On Wednesday, it's the Fed meeting minutes. We've already talked about that. Friday, October 10th is consumer confidence, wholesale inventories, and Michigan sentiment. This measures consumer confidence in the market mood plus treasurer borrowing. These are all things that are going to impact your 30-year fixed rates. And if something market moving happens, that I'm going to reach out and I'm going to let you know. So make sure you're paying attention to my emails, my posts, and all that stuff, especially if you're out there looking for houses. Speaking of which, if you're out there looking for houses or you're thinking of refinancing and we're not working together, there's a QR code there. Book an appointment. It's called a Hopes and Dreams. During this 20 to 30-minute appointment, we're not going to take an application, pull your credit. We're going to sit down. I'm going to answer all of your questions, make sure you're on the right track. We're going to put a plan in place for you. We're going to explore your credit score based off what you tell me it is. My job as a broker is to ensure that when the time is right for you, you have yourself in the best position to get the best interest rates. And then once we are ready to shop for interest rates, we're going to find you the best rates out there. So that's my update. Have a wonderful Monday. And if you need me, give me a call. Would love to connect. Paul Brands, Clear to